Good afternoon, guys. This is Bruce Marshall for Simpler Options doing the free video for Wednesday, March 22nd. Today was a relatively calm and uneventful day after yesterday's big sell-off. And what I want to start with here is looking and comparing the three major indexes side by side. I've got the cash indexes, not the futures. So let's look at the S&P, the NASDAQ, and then the Russell. And what I want to look at is kind of step back, bigger picture, and kind of look and see where we are, because we've got some important things coming up to that can determine, where we're going to go. So I've got these three overlaid here. I don't know if you can see it here, but this on the S&P, this was a sell-off into the election, and since the election we have been basically straight up. Same thing with the NASDAQ, basically been straight up. And I've kind of got these charts scrunched down a little bit, so the NASDAQ actually is stronger than it appears here. The NASDAQ has been leading the whole way up, and really, if you notice, has not did not retrace as much as the Dow did, for example. Now the Russell is a whole different story. So here, this is the election. We had the initial move higher, but then we got a flatlined for months. We've been trading sideways in the Russell. Now the Russell's 2,000 stocks. It's it's smaller cap and things like that. But the Russell should be moving. It's a more growthy type index. Should be moving higher, and it's not. It's been again, it's been just churning here sideways, and the Russell really was the first one to kind of roll over yesterday and took a pretty good hit yesterday. So what does all this mean? Again, I wanted to start from a big picture and kind of drill down. We did come down into some key support levels on the Russell, on the transports, and we actually broke through some on the S&P today, but then turned around and kind of made up a little ground. So bottom line, there's no definitive answer as far as are we going to roll over here or not. One of the big key things that is happening, I'm sure you've heard, the Healthcare Act vote is going to happen tomorrow. And that's I think it's a lot more important than people even realize, because this is going to set the tone for is the Trump administration going to be able to get all these things done. And right now it's it's not looking so good for as far as votes to get this the Healthcare Act passed. It's got to go through the House first and then the Senate, but I think it will pass. But if it doesn't, then this is going to set the tone for are the tax reform, is the tax reform and all these other, infrastructure spending and all this, is this stuff's really going to happen, that we've heard so much about. So it is, again, on the surface, things look pretty calm, but under the surface, I think there is some pivotal things happening here. So I am raising a little cash right here, going to wait, kind of see, until I get some direction the next 2-3 trading days, maybe week, before I commit too much more. I am looking at the financials. I'm definitely watching the transports as far as some some ideas. Now we could continue, the trend is higher. We could absolutely continue this higher, but all I'm saying is, and the trend is higher, so it would make sense that we continue this, but you really need to be careful of if things start breaking down. You need to be aware of that, aware of the signs, and kind of get out of the way if it does start breaking down. So again, I just wanted to kind of have a bigger picture view, because I'm pretty light right now as far as positions, and not really adding a lot in this current environment right now until I see if this is the start of something bigger, or are we going to buy the dip and it's going to turn around and resume the rally back upward. So again, hope this is helpful. Stay light on your positions, and be very nimble, I would say, in the next several trading days, next week or so, until we get some direction one way or the other. So I hope this is helpful, and good trading. Have a good night. Thanks a lot, guys.
And for those of you that were not on the webinar last night. I wanted to tell you a little bit about this class and some tools that we're coming out with on Saturday. And this is nice because, I mean, for those of you that are newer to our site, we're going to do kind of a 2-hour starter on Saturday. Talks about just my top 3 favorite setups in the options market. And then we're going to have a full-on strategy session, which includes a new indicator called the triple squeeze indicator, which I'll show you real quick. And then the live trading includes, of course, the live trading as well as the expected move indicator. And then, of course, there's our live event. You guys can read all about those. It's going to be a very awesome class. Let's dive into it real quick and at least show you the 2 tools that we'll be introducing. So the idea with this started off as a quest, okay, a question of what happens if, say, XLY, which is a sector, has a squeeze and rallies. Will a stock that is in that sector, like Priceline, also have a big rally? And you can see here that the answer was yes. And it was yes sometimes, but not all the time. But I wanted to see, when was it yes consistently? And the answer became very, very apparent very, very quickly. And what I noticed is that if a sector was going to have a squeeze, okay, and look at this, the technology sector makes up 24% of the S&P 500, financials 14%, okay. But what you'll notice too is that Apple makes up nearly 15% of the technology sector, okay, Microsoft 10%. If we go down here to XLY, now here's where it gets kind of interesting because I consider Amazon a tech stock, but guess what? If XLY moves, Amazon moves with it. Okay, it makes up 13% there, but also Priceline is one of the top 5 holdings of that sector. So what I found kind of on accident is that a lot of these stealth moves happen when a sector sets up, okay, and is ready to kind of take off. And when it does, even though all the corresponding stocks in it, the top 10, may not have a squeeze, they're going to get carried along for the ride. And these turn into fantastic moves. So what we did is put together an indicator that shows us, like, okay, great. Now here's Facebook. It's in a squeeze, right? So there's twofold here. So the first thing was like, okay, if a sector takes off and a stock doesn't have a squeeze, is the stock that's a top 10 holding going to get carried along for the ride? And the answer is an emphatic yes. But from here, when there's say a squeeze in Facebook, and this is a 195-minute chart, when I notice that there's at least 3 other squeezes in corresponding indexes, so here's the spiders, here's the Qs and XLK, this becomes kind of a triple threat, and that's when you get the biggest moves, okay? And if you compare this to when you get the same squeeze set up without that. So if you look at this here, then you're going to see here's a 195-minute chart on the right and one on the left. This squeeze on Facebook does nothing. It's a failure. Remember, squeeze rate has a 75% success rate. 25% of the time it doesn't work. I want to kind of pinpoint those 25% of the times. Like right here, there's a little squeeze in IWM. That's not going to impact Facebook. And there's a little squeeze here in energy. That's not going to impact Facebook either, okay? But when you come over here, you can see like, wow, there's in addition to Facebook, there's also a corresponding squeeze setting up on all these other time frames. Okay, and so that's what these are. Is just it allows you on any time frame to sit there and say like, okay, according with my stock, if there's any time you can get kind of that triple squeeze combination, whether it's a combination of indexes and sectors, it's going to be that much more. But more importantly, when you see that there's one of those key sectors squeezing, then you go to the top 10 holdings of that sector because they're going to get carried along for the ride as well. So from there, what I was interested in, what are good targets that the institutions are using? Because what we're doing here is essentially playing on the same side of the institutions. They're forced into these trades due to liquidity. All right, they're all chasing the same performance. So where do they get out? And what I found, which was very, very surprising, is I'm all about expected moves and 1 standard deviation moves and different things like that. But what I found is that what became very, very consistent with these trades is what I call the 2-week out rule. That when you get in, you don't really worry about the expected move for the option series for the current week that you're in. You actually go out to the following week, and that is where the targets are. Those are the levels that will be defended, and that's how you can position your trades. So now when I go through this is great because I can sit there and say like, oh great, okay, there happens to be a squeeze here. Are there any corresponding squeezes? And if so, what is my target going to be? And that way I'm on the same side as the institutions, okay? Now the final piece of this puzzle was, and here's a snapshot of my P&L for my year to date, and you can sort it by symbol. So it doesn't mean I did one trade in Priceline. That means I've done like 12 trades in Priceline, and cumulatively I've made $49,000 in profits. Cumulatively in Tesla, $46,000 in profits, etc., etc. And just a snapshot of my account so far this year. Started off at $117,000. I've made $152,000 in profits, less $6,500 in commissions. Totaling now $263,000, which is a return of 118%. Okay, so far so good this year. So I was just talking about Priceline. So besides these tools, what I've also found is understanding for each particular stock, when there is a setup, which strategy works best. And you'll be surprised to see here with Priceline, simply buying a call just didn't work. Okay, and even though all the setups I took on Priceline this year were bullish, had I just bought calls, I wouldn't have made any money. Now the deep in the money calls, lost 16%, the 60s 2%, and of course it's not surprising that the out of the money Delta 25s lost 47%. But when you do one tweak and combine that with a put spread, okay, look at the results and how different they are. So now you've got, essentially buy a in-the-money call and sell an at-the-money put credit spread, 139% return, exact same setup, okay? And this is so critical to understand this stuff. So this is the stuff I'm going to be talking about. So if you go to, and you'll see a link for this, but if you go to simplertrading.com/shadow, it'll come to this page. And what we've done this time is we've done a starter class. And the starter class, and by the way, this is going to be this upcoming Saturday, okay? So on Saturday from 9:30 to 11:30 Central, and if you can't make it live, that's fine, it'll be recorded. This is just kind of a, hey look, this is my top 3 favorite option trading strategies. This is designed if you're a newer trader or if you're an intermediate or advanced trader, but you're newer to simpler, okay? And it's like, hey, look, this is the squeeze. This is why it works. These are the waves, et cetera, et cetera. And so it just for those of you that are, it's kind of a starter kit, but it's the base foundation that I like to use. The strategy is where we dive in for 5 hours, and that'll be from 12 to 5 that same day, where we talk about why institutions are cornered into those top 10 holdings, what to look for, the checklist on how to get in, how to get out, how to find them, how to manage them, and most importantly, what type of option strategies to do on these. And most of these are pretty easy. Buy, call, sell, put, that kind of stuff. Or buy a call, buy a put. You don't have to do spreads or anything like that. And this includes that triple squeeze indicator. Okay. And then the professional package, that includes live trading. Okay. So that, with this, you'd get the starter session, the Saturday session, the triple squeeze indicator, some live Q&A follow-up after the class in case you have any questions. Trading live for 3 days. Why is trading live for 3 days important? Because it's like if you read a book over the weekend on how to play golf, okay, and it's like, great, you read it all, and then you go show up at the practice range or the to go play a game on Monday. You're not going to do that well because you didn't actually really get to practice, swinging a club. You just read about it, and you don't have somebody there kind of showing you like, hey, maybe you should, loosen your grip a little bit. And so the whole idea of the live trading is we get into a situation where now you can practice it real time. You can mimic me and follow me with what I'm doing. You can ask me questions. You can watch how I get into trades and out of trades. What happens if it's not quite working, and where do I take profits? And that stuff just helps immeasurably. And what we have been doing, and this has been consistent now the last 12 classes in a row, where trading a one lot, we actually make enough money to pay for the class itself, okay, which is a lot of fun. And then we do have a live event coming up in Austin. There's a few spots left for that. That's in June. And that's always great, and that includes everything here if you're into those and into the live events. For live events, it's one of those things where usually with folks, you're ready for that, or you're maybe unsure. If you're ready for it, I encourage you to grab a spot. Otherwise these other things are awesome. So again, these happen this upcoming Saturday. This will be live trading then the following week. If you scroll down, all the dates will be down there once you get onto the page. It's going to be a lot of fun. You're going to love these tools, and this strategy is going to take your trading to the next level. All right, you guys have a good one, and we'll see you at the next update.